What's going on, guys? The cryptologist here, back at it. Been a long time, a long time. 3 kids does that. I have a 5-year-old, a 3-year-old, and a 1-year-old. So I've been crazy busy. and so figured it's about time to get back onto the live streams, break down the Bitcoin crash, and possibly a comeback. We'll dive into that. I'm going to start with the high time frame, and then we will dig into the low time frame. And like I said in the description, if there's anything that y'all want me to check out, crypto, stocks, whatever, I'm more than happy to check it out. If anybody pops on, I will look into it. So just starting out, I want to start with the king, the Bitcoin, the Whamma Jamma, one and only, yours truly, digital store of asset, digital gold. And just quickly, I'm going to turn off all the indicators. You can see where we came from on the high time frame, on the daily time frame. We had a substantially large drop off over a sustained period of time from the top in November all the way till we had, a decent little bounce. Here we had a little recovery, but not really. In January's, I'd say, when we got a little relief, and we had from January to about May, almost, mid 2022, where we were consolidating in this range between, 40, just under 50, all the way down to 33. And you can see we were holding somewhat of a bullish market structure still, even after this drop, until we lost these previous lows. I'll zoom out on the weekly time frame. You can see we had hope, and I'll draw it out for you here and here. A higher high on the weekly time frame. I'm sorry, a higher low, and we still had hope until we closed below here. And that was really the first big on a high time frame. A couple other things that I've been charting that were worth noting here is we had this channel, and let's see if I can find it here. It's been a long time since I've charted it. Yeah, this is about what it was. We had this channel that we were in, and it was roughly like this, give or take, right about there. And so, we had the higher low here. We had this channel that we were bouncing around in. We found a bounce here. And on the daily, we had multiple touches here. And it looked like there was a chance that we could recover and head back to highs and potentially keep moving on. But as you know, the economy, the world has just been getting crushed by all kinds of crap. One thing after the other, from Corona to now monkeypox to this recessions and interest rate hikes and you name it. So any relief rally that we've had has just been suppressed by some sort of bad news, the economy, and then just, shorts really coming in strong. The bears have been strong. And when we got back to this level here and had this upthrust above resistance, we quickly broke back down. And then from there, we lost this very important low, this higher low. And from there, we didn't even recover. Once we had one daily close below this this low over here, we just straight dropped and never have come back to retest that level. And so now we are under 30K here. 30K did not hold up, and we haven't even come back to retest it since we've dropped and closed below over here. And so now zooming into where we're at now on the daily time frame, the logical thing that's going to play out from here would be a retest of this area right here. I'm going to do a box just to give us a little bit of grace on the exact point of contact that we'll be hitting. So I'd say that this zone right here is, since we've kind of broken out of this range, the next real resistance point. Can we catch up, hold up, turn around from right here? We can. So it's good to pay attention on the low time frames to see if there's any signs of weakness and reversals. There is a pattern that I'm watching that is somewhat of a rising wedge that we're in, which is a bearish pattern, bearish bias pattern. So I don't think we're completely out of the woods yet. But if you see here from this high, we've had a couple of wicks above, a couple of fake outs, and we just closed above on this last daily close yesterday. Or I should say today. Today's daily closed above. And if you look at the volume is not really there to support, a breakout from this point. And let's see what OBV looks like. I mean, RSI has been climbing. RSI doesn't look like there's any bearish divergence. OBV, there does look to be, let me clear out some of these. I'll get into the EMAs here in a second. OBV is telling us that we need to be a little cautious because from here on, well, we did have a breakout from this peak to peak here, and we had a bump, and now we're running here. So, and reading between these two OBV points right here, there's no bearish divergence just yet. It's a possibility if we lose steam, but as of right now, this downtrend line was broken here, and we back tested it here on this wick, and we closed back above today. So there's no bearish divergence that I see on the daily time frame. Low volume, but we did break down on this level here. We broke above this level here. But I'd like to see us break out of this rising wedge, and then I'm going to pull up the EMAs that I like to use. I like to use the 834 and 89 EMA. It's fib level or Fibonacci numbers in EMA format. And as you can see, I've posted this before too, but on the daily time frame, you can see that the EMA 34 has proven as pretty significant resistance over the stretch of this year, all the way from November. So many touches here, touch here. We got above and then it bounced, but when we had a little chop here, but the 89 EMA acted as the resistance point once we broke above for the first time. And once we fell back below the 89 and the 34 EMA, the 34 is the pink, the 89 is the yellow. We went back to the 34 being a resistance point again and again and again and again. And then we had some chop again. And I tweeted this a while back. I would say right around mid-July, when we were breaking above for the first time since we fell back below the 34 EMA, that usually when we break out, there's a retracement, but the second breakout above the 34 EMA usually is the one that gives us the retest of the 89 EMA, which it seems like that is now coinciding with the top of this wedge. So at the very least, I mean, from where we're at, I think we're looking at a 25.3 target, somewhere around there. And but the fact that this 89 EMA and the top of this wedge are coinciding, there could be a rejection point here before this major resistance up here on this horizontal level. And so this is definitely an area to watch. Let's look at the Fibonacci levels here. And oh wow. And so the 0.5 actually lines up, and actually I'm going to move this to this breakdown point right here. But yeah, the 0.5 lines up perfectly with this rejection point and then this fake out here. So, and it's almost lines up perfectly with the top of this wedge. So this 24.8 area, 25.2 is going to be a little bit choppy given that there's some tradable levels here that bears will be watching for any signs of a rejection. Whether you're a fib trader, EMA trader, let's look at the regular EMAs, or I'm sorry, smooth moving averages. Oh, and then you've got the 100-day moving average also lining up at the top of this wedge. So there's a lot of potential roadblocks ahead right here, right where we're at. But you can see that this 786 lines up perfectly with this resistance, this major resistance point. So I think that this is a sticking point, but not something that if the bulls, want to push, it can't, they can break through here fairly easy because they've already broken above some major resistances on the zone we were trading in for some time. So I think that more than likely we're going to get a retest of this level in the near future. But I don't see us on the first attempt breaking past 30K. I think it's possible to wick above this level, but essentially, up thrust and come back down and then maybe retest the 0.5 or even as deep as the 382. But I don't think you definitely wouldn't want to see a fall back below the 382 if we get back above here, because that would most likely send us all the way back down. Probably do, you could see a bump on the top of this rising wedge and then continue up. Or, you could see something like this and then, an M pattern, or even head and shoulders if you wanted to make it that way, but some sort of reversal pattern up here, and then a retest of the 382, and then we could jump back up. That could happen. But what I was saying is you definitely don't want to see us go here and then drop below here, because then you'll have the bottom of the wedge, the 382 as a resistance point. Also, with this this higher low that was set over here lost, this would also be a horizontal level. So there'd be a lot of resistance built into this level on 23K that would most likely send us back down to the bottom to retest the lows of this range. And then this would just be a larger range at that point. So it's important for the bulls if we do get out of this wedge, because honestly, if we do stay in this wedge and never break out, then the bias would be back to the bottom of this wedge, right? So, some people like to trade within patterns. For me, I like to wait for I just don't have as much time in life now. So I like to wait for major developments to occur and really wait for those big volatility moments, the more tradable moments, just being picky and choosy. So for me, I'd be looking to short this major level here. Not really trying to jump into this mid area. If there are signs of weakness up here, this could be a trade at the 0.5. We can zoom in and see what's going on. And you can see, right now, there's no reason to believe, let me clear out all this. There's no reason to believe that Bitcoin's in any trouble whatsoever. Although this is definitely somewhere you want to keep an eye, because, we got one close above this peak and then it acted as resistance over here. And we had up thrust above this level here and then a fall back down. So, and we had this rising level. So it's somewhat of a ascending triangle here, not very clean, but the pattern acted as such. So, this now being a rejection point here and it previously being one under here, this is kind of a wall to watch for. So we're trading right at the top of it. going into the weekend. So, I just say trade cautiously, but shorts can get wrecked just as easily as longs can get wrecked in this scenario. You can load up on shorts thinking that, the weekend there's low volume, that this is going to exhaust. So it's better to wait and honestly maybe wait for Monday to see which way we're going. Just too easy for weekend chop to get you. But again, my feeling is that the bias is leaning towards a move at least up to this MPOC area, but more than likely, probably a little bit higher. I'd say probably up here, but anywhere in this area would be a good take profit. This area in here is a really great area to start taking profits. Can it get back above this area? Sure. But again, I don't think it's going to get above 30K. And actually 30K, there's an MPOC right here. So take profit starts at around 27K all the way up to 29K, 30 if you really want to hold it. And that's the way I'm leaning right now. But, if you're jumping in a trade on the weekend, like I said, just be cautious and pay attention to low time frame signals of a reversal. But for now, Bitcoin looks like it is moving in the right direction and there's no signs of slowing down. The only negative is it's going into the weekend. But like I said, pay attention to those targets that I think are the more than likely plays up here. And really great short opportunities if you haven't already gotten into a long from the bottoms here. But happy trading, guys. Hopefully I'll be back sooner than the last time. And message me if there's anything you're looking at you want me to take a look at. Peace.